Here is the overview of today's gold market news. Gold technical outlook and price movements. Market sentiment and Federal Reserve expectations affecting gold prices. Global factors affecting gold prices. Here are the latest gold technical outlook and price movements. Gold price is currently bullish as long as the triangle resistance turn support at $2,470 holds. Recent symmetrical triangle breakout and a 14-day relative strength index above 50 support the bullish sentiment for gold. Gold's uptrend remains intact, with key resistance levels at the all-time high of $2,531. A breach above this level could target $2,550 and then $2,600. If gold falls below $2,500, it might test the previous all-time high of $2,483 and potentially the May 20th peak of $2,450, with further support at the 50-day simple moving average of $2,400. If gold prices exceed the record high of $2,532, the next key target is $2,550. A breakthrough above $2,550 could lead gold to test $2,600 and potentially reach the triangle target of $2,660. Immediate support is at $2,470. If gold falls below this level, it may test the psychological support at $2,450. Additional support could be found at the $2,450 level if the price continues to decline. The gold market is experiencing ongoing buying interest, with the $2,500 per ounce level drawing significant attention and causing market fluctuations. The market saw a slight rally early on Friday, but is facing uncertainty around this key price level. Let's look at the recent market sentiments and Federal Reserve expectations that are affecting gold prices. Markets are risk-averse, with a focus on U.S. Federal Reserve Chair Jerome Powell's upcoming appearance at the Jackson Hole Symposium. The Jackson Hole Symposium is a major event that will influence gold prices. Traders are closely watching the speeches, especially from Federal Reserve Chair Jerome Powell, to gauge future interest rate movements. The symposium is a critical event for determining the direction of U.S. monetary policy, which affects gold prices. Powell expressed confidence that inflation is nearing the 2% target and suggested that it might be time for policy adjustments, including potential rate cuts. He emphasized the Federal Reserve's shift towards maximizing employment, which bolstered expectations for a rate cut. Federal Reserve presidents for Philadelphia, Patrick Harker, and Chicago, Austan Goolsbee, indicated that the Federal Reserve focus is now shifting towards employment and managing rates methodically. Traders are anticipating aggressive Federal Reserve rate cuts due to signs of a loosening labor market, which is supporting haven demand for U.S. government bonds and putting downward pressure on Treasury yields and the U.S. dollar. Traders increased their expectations for a 50 basis points BPS rate cut in the September Federal Reserve meeting. The CME FedWatch tool showed a 36.5% chance for a 50 BPS cut, up from 24% the previous day, with a 25 BPS cut being fully priced in. Gold prices corrected by approximately 1% on Thursday after a rebound in the U.S. dollar from over one-year lows, influenced by weak U.S. economic data as indicated in the S&P Global Business Purchasing Managers Index and jobless claims. The U.S. dollar index fell by 0.8% to 100.68, reflecting a weakening dollar as traders anticipated rate cuts. U.S. 10-year Treasury yields dropped by 5 basis points to 3.80%, further supporting gold prices. The August non-farm payrolls report is anticipated as a key indicator for the Federal Reserve's decision on rate cuts. Other upcoming U.S. economic reports include durable goods orders, the Conference Board Consumer Confidence Index, initial jobless claims, and the Core Personal Consumption Expenditures Price Index. These are the latest global factors affecting gold prices. The U.S. dollar has weakened due to a renewed U.S. dollar and Japanese yen sell-off, influenced by Bank of Japan Governor Kazuo Ueda's comments about potential interest rate hikes if inflation targets are met. Geopolitical issues remain a significant factor impacting gold prices. These concerns contribute to the attractiveness of gold as a safe haven asset. Central banks around the world are purchasing gold, which supports the market by providing a base level of demand.